Good evening. Our team has decided to do the next event at Hyderabad on the 28th of October, around about 4:30 to 5 in the evening. It's a Saturday. Those desirous of meeting me in Hyderabad at the event may contact the email given below, moneypagehyderabad@gmail.com. We have also given WhatsApp numbers. You can contact us there. My team will be happy to help you with the details.
Hi everyone, welcome back to Be Rich. Today I'm going to talk about equities, 5 specific companies which are currently not valued, favored by Mr. Market, but seem fundamentally okay and strong. And maybe there's something you can investigate and look into over the weekend and see if it's something which you want to put on your watch list. Of course, none of these companies are recommendations. I'm not asking you to buy them. I'm not asking you to do anything with them other than investigate and see if you like them or not. And after your investigation, do talk to your advisor, your SEBI registered advisor, and find out if something you should be doing too. Anand has not vouched for any of this. I've not even shown this to Anand. So Anand has no opinion about any of these companies. These are purely something which I just read. And I thought I'll share with you because it's something I found interesting, worthwhile investigating, and together we can look at them and review them together. So this is all the disclaimers I've said in the beginning of the video, so you clearly understand that I'm not asking you to buy these companies. I'm not saying they're recommendations. I'm just saying it's interesting how to see the market reacts to news and why some stocks got a favor though they fundamentally look all right. That's the essence of this video. It's a learning video. Please keep this in mind as we dive into this. First company, Polyplex Corporation. Well, this company has been around for some time. It's not a new company. It's quite an old company. And they manufacture polyester films, which we use for packaging, electrical work, and industrial applications. And their market share in places like Thailand and Turkey are 25%. They export quite a bit. And in India, they have a 10% market share. And in the US and in Indonesia also they're present. The company has fallen, its share price has fallen by almost 40% in the last year. The primary reason which analysts have given for this company's share price to be so undervalued is poorly shown quarterly results because of high input costs, because petrol has been boiling. So there's been main reason for that is petrol prices are going up. The other is the disruption in the market, export market overseas, thanks to all the macroeconomic activity which is happening, coupled with all the geopolitical activity which is happening. So this is one of the reasons the company has shown poor quarterly growth. But another reason why analysts have been looking at this company in unfavorable light is there's been some constant selling by the promoter. His stake is being liquidated, which has been one of the compelling reasons for the decline. Like Anand has always said, if the owner of the company doesn't believe in the company and the stock and the business, then you as an investor should definitely not be putting your money in it. So that is something you need to investigate. Go over a few years and see what was the promoter's holding a few years back, then track through COVID and see what was his holdings and what is it currently now, and what is the percentage which he's been selling and why. If there's a reason, you could find out, is something you can look at. But aside from this, the company has low to debt in its book. Its debt to equity ratio is only 0.01 and the interest coverage is also 21.2. It has a healthy track record of being generous to investors with an average dividend payout of 35.4% and a yearly yield of 2%, which is phenomenal, I would say. And it has incurred plans to incur about 7.8 billion rupees in capex for the financial year of 2024. And going for the company's growing scale of operations, rising demand of this product should, at least in the medium term, give sufficient growth. So is this something you should look at? Is this price point valid? Is the PE ratio at its point where you think it's profitable to move into this company? Is something for you to investigate and to read into and see as a value investor if it's something you should look at. The second one has been making the news for quite some time, and which I don't know if you should look into, but I wanted to touch on it anyway since it is there on the list, which I'm going to talk today. So some of these are curveballs which I'm throwing at you as a value investor. You may not even touch them. So this gives you some food for thought when you're over there over the weekend to look at this with an unbiased view and see. The second company which I wanted to talk about was Delta Corp. It's the largest gaming company in India, one of the listed companies, casino gaming. We spoke about it. The government has slapped this with tax, and the company share price has fallen by 25%. Personally, this is me personally, I would not touch this company. Because simple reason, when the GST has gone, they've asked retrospectively, they're asking the company to pay a GST of 28% for online gaming, and it's taken a heavy blow to the company's books. And going forward, will this be something people will be willing to spend more money on? I don't know. This is something which you have to wait and watch. If you're a consumer of online gambling and online gaming, then you will probably have a better view of this. I personally do not consume online gaming of this nature, nor do I do gambling of this nature, casinos. So I do not have a view into this realm or this industry. But that being said, the price has corrected. Is it a value pick? I wouldn't say so. But it's something for you to investigate. Do think about putting in the comments below whatever you think your views are about this. What do you think? So your other viewers can read and also feel enlightened by your points of argument. Are my arguments sound, or are you feeling different about what I'm saying? Third company which we want to talk about is Gujarat Gas. This is another company Anand would not touch, and I would agree with this. It's a government company, main reason, and it's engaged in the business of distribution of natural gas. Remember, it distributes natural gas. It's a government company. Main two caveats why Anand would not look at this. They're India's largest player of city gas distribution, and they're in 44 districts in 6 states and 1 union territory. The market price is corrected, share price is corrected for this by almost 10% in the last year. The primary reason is for the weak quarterly results, and few of the last few quarters, revenue and profit fell consistently in many quarters due to fall in industry volumes, and customers have switched over to cheaper alternatives to propane due to the increase of the price of oil price and natural gas price. But the company's financial performance has improved in the last 5 years. Revenue and net profit growth for the CAGR has been 16.3 and 29.6 respectively. And they plan to spend $10 to $12 billion capex each year for the next 4 years to expand its existing and going into new states. And the company plans to use its internal cash flows to fund these capex. So going forward, the company's expansion plan will drive volume growth, in turn strengthen its market position and medium terms, is what analysts say. But I won't touch this company as a value investor. Would you look at these companies as a value investor? I don't know. So analyze and please put in your arguments on why you think, if you think as a value investor, why you would look at this company. Even Anand and me don't think this company is worth keeping in your watch list. Would you put this company on your watch list? Please share below. Fourth company is another big no-no for Anand, and I agree with him on this. This is Jubilant FoodWorks. Why is Jubilant FoodWorks? What do they basically do? They have international brands. They've tied up with Dunkin' Donuts and Pizza Hut, and they run franchisees all across up and down India. And they are also right now in Sri Lanka, Bangladesh, and Nepal. And they've got exclusive rights for outside operations in these countries. And the share price has fallen by 10%. Main reason for the fall in the share price has been weak financial performance, rising inflation, change in leadership. And already the company has been enjoying a very high valuation, and FIIs have been selling. When they've been pulling the cash out of India, that means FII have been having a very big holding in these companies, and it's been dumping it. So this is the main reason. However, post-COVID-19, the company has been able to grow in revenue at a very fast rate. The last 3 years, the revenue and profit have grown. Would you look at this company? I wouldn't. They've also been targeting opening new Popeye stores across India for the financial year 2024. You've been seeing it in your city. I've been seeing in Bangalore. I've been seeing it here in Chennai. They're opening it up and down the country. It's pretty much like KFC. KFC and Popeyes are pretty much equal, I would say. I'm sure a lot of you would feel differently if you have strong allegiance to any one of these brands. But the main reason why Anand wouldn't touch any of these is they themselves are a franchisee. They don't own the brand. They have to return and pay royalty to the main parent company in the US. So if the relationship turns sour, like change in leadership happened, if something happens and it turns sour, with the main parent company, or the parent company decides to change its focus or move away or pivot away from this, these guys will be left in the lurch. This is the main reason why Anand, as a value investor, long-term investor, will not look at these companies. So I tend to agree with him on this. The last one, this is going to be a bit of a controversial one, which I'm going to leave what Anand's opinion is outside and let you guys not be cued in with the cheat sheet as to say from what Anand thinks about this or what I think about this. I'm going to leave it out there and just talk about the company, what this article says, and leave it out there for you to decide yourself. And put in the comments, what do you think? What do you think Anand would say about this company? The last one on the list is, of course, is Tata Company, because I had to throw the sidewinder, as I said. It's a Voltas. The company is a household name that offers engineering solutions in air conditioning and has a market share of 23%. Apart from catering to retail market, it's a brand cooling products such as refrigeration, mechanical, electrical, plumbing services, and they supplies engineering equipment too. Over the last 1 year, Voltas shares prices have fallen by 4%. The fall is attributed to FIIs selling and the fall in profits. FIIs have been continuously selling their shares in the company since March 2022, bringing down their shares holding from 26% to 20% on March 23. The last 5 years, the revenue of the company grew. However, the net profits have fallen. As a result, the net margin, ROE and ROCE, have contracted. Voltas has announced a capex of 3.5 billion rupees or 5 to 5 billion rupees the next 18 months to increase manufacturing capacity to 5 million units. All this indicates growth and prospects of the company are high. So the main takeaway is FIIs have been liquidating their positions in this Tata company. So should you be moving in? What are your views? Is the PE ratio for this company correct? Are the debt equity ratios correct? Have a look at this, Voltas, and I would love to hear your opinion, and I would love to specifically hear you predict what does Anand think about Voltas. So it being a Tata company and it being Voltas is something which you guys will have to think hard and long before you come out saying what Anand would do with Voltas. So what is the main takeaway? Even though most of these are fundamentally strong stocks, they can be a hit in the short term due to market volatility. This should not create a panic, is what this article is saying. Stock market investing isn't tricky. You just need to be patient. If history is any indication, you can see these fundamentally strong stocks have rewarded their shareholders handsomely in the long term. So this is what this article is saying. We agree with all this. Would you invest in these companies? Would you keep these companies in your watch list? Some of them, maybe I would. So the main reason I brought this article out to you is this is the kind of things you see in the news today, in the media today. Like we have clickbait on the internet. We have these kind of catchy headlines on the news articles, on the rag papers, as Anand says them, which is like 5 stocks which are going to give you handsome returns this year. Should you keep these stocks? So they pick 5 stocks and they put them on the article and they share them. If you're a very novice investor, you might go running to your investment app and start investing immediately, which even me, a long time back when I was a novice, I had fallen prey and victim to this. I strongly suggest you do not do this. If you see an article and you read it, your initial reaction might be to buy or sell. I would say hit pause at that moment, take a break, go do something else for a while, come back, reread the article, then investigate. Investigate and get your own facts and stories right before you decide to buy or sell in anything. And most importantly, do consult your financial advisor before you do any of this. I hope you enjoyed this video today and you found it informative and entertaining as always. And I'll see you in the next one soon. Bye.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.